I'm William Grantham with IchimokuWeather.com with this trade plan for Fidelity Financials. This is a financial sector ETF. It has an expense ratio of 0.08. We came into the first of the year looking very well. We're above the cloud. We're above both the blue Tenkan-sen and the red Kijun-sen, and price action pretty much rode the top of the lines all the way up to where we currently are today without ever touching the cloud at all this year. And we have a completely green cloud throughout the year, and we're quite a ways away from the 200 period simple moving average, which is the black line here down below. So if we were to take a market order on tomorrow and it comes in, or the market opens at about the same place where it closed today, it closed today at 54 and 52 cents. 10% below that is 49.07, and 10% above that is 59.97. So the question is, will it come down and hit the low before it goes up and hits the high? That's the chance that we're going to take, and we're going to put on the paper trade on this tomorrow morning with a market order. Current market conditions do show that we do have the blue line going above the red line back here, and that created a bullish channel that's still in play today. Price action did come down and touch the bottom part of the channel, but then pretty much has stayed above it and is currently riding it up. And we do have a slanted up blue line, which is showing momentum on the short term, and a little bit of a flat line on the red, showing that we have not had a new higher high or lower low in the last 26 days. And that's what's going to keep the red line flat until some old market action that drops out, and then that could cause the line to move up some. So we are currently well above the cloud, and we do have the cloud as support below us in between getting in and where our stop would be at, as well as having the blue Tenkan-sen and the red Kijun-sen. Looking at our average true range ATR safety margin, if we take our entry at 54.52 and we subtract 49.07, that gives us $5.45. Our average true range is 75 cents. So divide that into the 545, and that gives us a 7.27, which means that there is a chance that there could be 7 trading days on the average range before market price would come down and hit our stop. So that gives us a safety range of 7.25. This is an example of setting up a quick trading plan for the financial sector using the ETF FNCL.